The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy.
On this episode of Pennies Going in Raw, we discuss how to take advantage of a hot market, huge SPY puts, and small caps heating up.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in raw.
Featuring Dan, Deity of Dips,
And Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, October the 13th, and I mean, SPY's pulling back. You've had puts. We've had a lot of kind of things going on, but at the same time, it seems like most people are having really good mornings today on this Tuesday as we're recording it. It seems like a lot of people had really good Mondays as well, even though SPY seems to be dipping and still in this massive range. I mean, it is such a funny stock right now. I mean, what do you kind of take of all this?
Yeah, first off, it's really good to see individual smaller cap stocks running. I would still like to see overall themes run, but I think that it's really good to see these individual stocks running, especially because it's the ones that have it's not like random Chinese, half a million float companies. Like, it's good companies that are getting 7-figure contracts, stuff like that, are running 30-40%. That's awesome to see. And the other thing that is really important is that they're not just popping and dropping. They're popping, holding, going higher. That's really good to see, because all these shorts that'll get stuck in there that, have been having a field day, now all it takes is one to hold and go higher for them to now kind of back off and rethink other shorts when they go into the market every day. So it's really good to see individual stocks popping. The other thing is like I said, is that I would like to see overall themes work a little bit, like sympathies and stuff, because that's when, you can just accumulate a basket, we call it a basket, or a group of the same theme, and just kind of wait. And I think that's where a lot of money is made inside the small caps. But overall, while SPY is inside this crazy range, it's awesome to see individual stocks really, really performing well when they during the day.
So I know last week we kind of touched on, how you really like to buy stocks that are, on the downtrend whenever they show that sign of reversal. Sometimes though, you kind of see a stock, you think, hey, it hasn't quite showed a reversal. There are some things kind of like it that are reversing, not quite in the exact same sector. It may not be as specific as weed, but it may be a small cap or an IPO or something in the tech space kind of. Is there any way that you could look at the market to catch that reversal as opposed to looking for the individual stock to, clarify a reversal?
Yeah, overall, if you have a scanner or something, and all of a sudden you're starting to see a similar sector all kind of pop up on your scanner for volume and relative volume, but it's not really moving the chart too much, that's a pretty good indication that it's getting accumulated. And that's one of those times where, the overall sector, let's call it recent IPOs with a low float, stuff like that that's really been hot recently. That's one of those times where you can look at it and, you can chill and you can start to accumulate some of the similar things. Like I think like DATS and Yala's been running together because of DATS. There's a few out there where, even if the stock itself isn't reversing, if you see a sympathy starting to run and that it's run before, you can most certainly, start to add in there. But again, it comes down to, your risk tolerance, and you don't want to get too big too fast. So, you don't want to get in there and get into a situation where you're adding and then you're adding and then you're adding and then you're adding more. So if you are going to add, let's call it, you want to put on a feeler position, that's fine. But just, you have to actually not lie to yourself, and you have to do a real starter position. Like it has to be like 1% of your account. Too often do I see people, who are like, oh, like, I had a good hunch about this, but I put 10% of my account in. Like that's dead money now. You can't use that for you can't use that 10% until that stock goes, if it ever goes at all. Especially because, like we talked about, is that you didn't even have confirmation that it reversed yet. Okay, so yeah, you can get into that add spot, but what is your edge? It's okay to trade on a hunch. It's okay to trade because the sector's starting to pop up on your scanners. That's totally fine, and that's totally okay. But you just have to understand that that's edge, but that's not real edge. That's not something that you can put inside a case study. And in fact, more times than not, your hunch might even be wrong. So don't get into an add spot. And I think that the other thing to note is that obviously with bigger accounts, it'll make a difference. Like if you have like a $10,000 account, putting in 1% of your account, even if the stock goes 10%, it's not going to do too much to your account. Can that
make $10?
Yeah, exactly. Like you'd probably be better off just, holding that and not wasting the opportunity cost. But if you have a $100,000 account and you put, let's say $150,000, $200,000 account, you put 1% of your account in and it runs 10, 20%. That is needle moving.
Yeah, that's $200 to $400 instead of $10.
Yeah. Exactly. You do that 10, 15 times, if you have 10 or 15 stocks that do that, I mean, yeah, you're in the money. You probably don't need $200,000 to trade with all the time. So I think that also to note is that it depends on your account size. And again, it depends on your risk tolerance. If you have no risk tolerance, then don't be buying, 5 or 6 sectors on a hunch with no confirmation, knowing that they could go down. It sounds simple, but we get into that, like feeling of like, oh man, like if this goes, that'll be great for the account. And then it's like, oh, well, this one usually runs with this one, so I'll add this one. Now all of a sudden you got a shopping cart. None of them show confirmation of a reversal, and you have 15% of your account in this.
Yeah, they, I think one thing that's pretty smart you could do is, throw out those filler beds on support, but have your, risk reward out there as, if it breaks that, wait for the next one, don't wait for yourself. I mean, we talked about the first time we were recording when Hugh forgot to turn his recorder on. It's like, being the kid first out of class when the lunch bell runs, or it's like being the kid whenever the lunch bell rings and you're Naruto running to the cafeteria. I mean, yeah, you may get there first, but you also may like run into the principal at full speed, head first, arms back, looking like an idiot. So there's definitely some downside to it. But going forward, I mean, you had some SPY puts you're pretty vocal about. People wanted that 435, I think it was 436 range to hold, and you were, pretty excited about it not holding. Do you kind of want to explain why you had those and what your plan with them, if you're still holding any?
Yeah, so my plan actually was to scale into a position as I would like to see below 430 overall in SPY, but I ended up buying same day or expiring options, the Monday expiring options. This is Monday that we're talking about, October 11th, and so obviously I had to get rid of them. I could have done a rolling order, but I just decided that I was just going to get rid of them. And there was a few things that really come into my mind when I think about this. One, it was a holiday, so it's low liquidity. A lot of times it doesn't take much liquidity to move the market in whatever direction the market makers want. So it's really fluid to have really big moves. So the other thing is that you gotta always, the thing that I always try and say is that what is everyone expecting? The opposite usually happens. And the reason of that is that that's where the money's made, right? Like that's, if everybody was so bullish, if everybody is so bullish and someone gives you, then the 2-to-1 odds are on the downside, then, you're going to take those odds because that's where you can accumulate. So I think that's really important to note that I really try and think like, what are the market makers thinking? What do they want to happen? What does everyone want to happen? And I'm usually trying to go against the other way. And so the price action yesterday was clear as day. When I say yesterday, I mean Monday. They bought SPY up. It ripped off open. It absolutely ripped from like 435 all the way up to 440. I knew that 440 had topped out twice before and that was going to be pretty high resistance. And so it came back. So it rejected, came back up and rejected again. And that's when I started to take a position. That was at about 12 o'clock on Monday Eastern time. And so, it had basically just flushed through the VWAP. There was big orders going through. Like massive. So that's when I decided on some relief. I added really into a high. When there was some, I cut up some of the position. When there was some relief and it bounced back a little bit, that's when I really hammered into the position. And it just faded for the next 2 or 3 hours. Now I did end up covering because there was a little bit of chop and I had given up about a third in premium just because of the chop. And that was right before the big flush ended day. And also, like I said, I had some same day expiring, and I just didn't want to get into that situation where I let a green trade turn red because of theta and also like if SPY had bounced back. So overall, it was a good trade. The action was pretty telling that 436 wasn't going to hold, and obviously it didn't. And then 436 has been acting as pretty good resistance recently. So I'll be excited to see where SPY goes from this little range. Where this little range goes. But overall, it was a good trade. It was a nice way to start the week. And like I said, I wouldn't mind SPY underneath 430 soon.
And kind of now going into the meat and potatoes of the episode, we kind of want to discuss growing your account whenever the market is hot. Let's say you do have that $5,000 or $10,000 or maybe even that $50,000 one that you want to take to the next level. Obviously, when you can day trade, when you can't, we always assume we're talking about having a cash account when we're discussing this. If you're under 25K, day trade until you run out of money. So, streets are talking. Looks like, we may be in for a hot winter. It's been a real technical fall. But at the same time, if it gets back to that chaser's market, we're not going to say we're going to chase, but we do want to take as many gains as we can. What do you think is like the step-by-step method of how we can approach this, and like where do we even start? And we want to get on it fast.
Yeah, so I think the first thing is that during these lower liquidity times and when things really aren't running, this is when you can really find a strategy that works for you and a winning strategy. And also, you have all the time in the world to study. This is kind of like I don't want to call it like mini camp, but like walkthroughs before like the NFL season starts. Like this is the top, like the NFL season, or like, your trade isn't going to be won when the market heats up. Like that's not when the work starts. Like the work truly is done before the market heats up. It's the same thing like in the NFL. Like that's like the chemistry that is built before the season starts.
There's only 53 people that make it. You don't want to get waived before the season starts and be stuck in, you don't want to be stuck in the G League or, in the NFL, fucking whatever it is.
Exactly. And then even farther than that, like that's when like the O lines, like that's when the chemistry builds. That, like you're not building chemistry week 6. Like the chemistry is built before the season even starts. So Going off that, it's the same thing like trading. This is when you should be studying this because there isn't tons to trade, or there's for most retail. I've been hearing that there isn't a lot of trades out there. So this is when you can find a strategy that works for you. This is when you can make it work. So I think that that's really important to note. And then going farther into that is that when you do find your strategy, okay, I don't use margin. I've never been a big fan, but I don't see anything wrong with if you find a great strategy using capital. Similar to like a hedge fund, okay, most hedge funds use 7-8 times their leverage, okay? But they can use that leverage because most of them say that they know what they're doing, okay? You can do that to grow your account.
Not 5 to 7 times.
No, not 7 times. But if you want to use 2x margin, but again, it comes down to you need to have the right risk management. You need to have the proper plans and proper strategy. You need to have a proven strategy. This isn't like one of those things where like, okay, if you trade for 8 months and you have like a 70% win rate. Now I'm talking like, hey, if you're 2-3 years inside this game and you have a pretty good win rate, but let's just say you've never had like 1,000% year, because that's ridiculous. So let's just say that, your win rate's 70%, and your account goes up like 5%, 10% every year. Yeah, I'm okay with you using margin. It's everybody else that I'm not okay with using margin. So that's one of the ways that I think that you can really grow your account. Like margin is scary, and you won't see me ever really using margin, but it's definitely a tool that you can use. It's the same way, like using a mortgage for your home or for real estate investing, stuff like that. So I'm okay with that. Now, on the flip side, for day traders especially, I think that this is the market where you can really triple your account. If you trade Apple, Tesla, the range right now is beautiful. And the reason that I say that this is where you can really 5x your account, and sometimes I'm going to even say that for the day traders, that this is where this is probably a better market for you than when the SPY was on that ascending triangle. Why? Because the range right now is so fluid. I'm looking, today is Tuesday, and I'm looking at the market, and you can see a clear bounce there's a clear support in SPY at 433 and a clear resistance at 436. That's $3 per share. Okay? That's $3 per share. Now, if you can figure out how to use options to your advantage, low delta, that you're scalping for those moves, and you have really good proper risk management, yeah, 100%. This is where you can really change your account around. Or on the flip side, let's just say that you don't want to do any options and you just want to take you just want to take commons. A $3 per share move on anything is great. You take 100 shares, that's $300. You could do that. I'm seeing it as we talk about this Tuesday. Since this morning, there's been 3 of those moves almost to the dollar. So I think that this is the time for day traders where, hey, listen, you learn how to trade range, okay? No, there hasn't been a lot of range inside the last 16 months, but range is your friend. Like, that's how prop firms trade. Like, they don't just go for like big, massive swings. They trade range intraday. On high volume things. You're not going to SPY is where you can, trade really nice range right now. Or even if you're a swing trader, like there's really good range all over the place. I'm looking at this range and it's 430 is clearly range, 430 to 440. That's a 10-point move. You could scale into options with that. And again, it comes down to if you have proper risk management, proper plan, there's no reason that you can't trade this range and do well inside your account.
So that, I guess, could be the off season. You're out of the off season. You got people that are working jobs and swings are popping. It's looking like the market is gonna be hot. How can these people that are working their jobs and even people that aren't, make sure they get the most out of it. If things are running, like how many 200% runners do you need to see to be like, hey, I'm gonna start holding some shit a little longer?
Yeah, I definitely think that it comes down to one, relative volume across the board of small caps. And in addition, you need to see what we talked about earlier, which is the, pop up on news, come down, hold, pop up higher and create new all-time highs. I mean, not all-time highs, but create a new high after that 9:45 or, after 30 minutes into the market. Because I kind of consider that anything can happen within the first 30 minutes and it wouldn't be weird. But if we get to like 11 a.m. Eastern time and, something is still kind of sticking around near that all-time high, near that high, and, it's kind of holding, you see that soaking, that's one of those times where I'm like, okay, maybe we have a little bit of an afternoon runner, because if it creates like another high after like 11 a.m., I mean, that's an all day runner in my opinion. So that's what I would want to see, is that not only something going up super high, but something going up, coming back down, holding, hitting a new high after that, let's call it like 10:30 Eastern time. That's what's really important to me, because that's showing that, okay, somebody's okay with buying up here, whether it be whales, algos, retail, whatever it is. Now, one time it's a fluke. 2 times we're getting more confidence.
It's a coincidence.
It's a coincidence. 5 times, okay, now I can put on, maybe now again, okay, because I know exactly what's going to happen. We're going to get one of these moves where 5 times it happens, and then it's like people throwing their accounts in at something up 200%, and then it fails, and PGR is the bad guy. Okay, I'm telling you this. Okay, you still need to go easy with it. Okay, so when you feel confident enough that someone's sitting there soaking and it's come after 10:30 and it's just coming down, hitting, and creating that new range up here, okay, go small, 2% of your account, so that if it does flush down and it does have a kill candle, you don't get absolutely smoked.
Yeah, and another thing, and this is more of my style, is scaling out less. Just progressively scale out less and less as you notice, hey, I'm out about 80% of the position and it's up another 40% than where my last sell was. Like, maybe I should, and then next time, now I only sold 60%. Next time I only sold 40%. Your profit margin is just getting bigger and bigger and bigger. And then, by the time you're holding it all is when the market sucks again. Then you'll be like, damn, should have kept scaling.
Yeah. No, exactly. That's a really good point. So usually when I'm comfortable, I'll scale out like 50%. But when the market gets hot, I mean, I'll do like 10%, 10%, 10%, 10%. But I mean, by that time it'll be up like 400%. And I think that that's a really good point. And then I'll keep like that core position. So I do think that, or let's just say that something pops up 6 or 7%. Remember, we talked about how if the market used to pop up 6 or 7%, I would take some off the table, like 20% of the position. If the market gets hot, I won't be doing that. I'll just hold because I'll be waiting for the move. So if buyers come into all the tapes, I'll just be there and I'll just be chilling.
Yeah, you got to understand that whenever the market's not hot, the move is not the move, but it still can be a move that you can take profit on. You don't always need to be waiting for the bigger thing, and you can always be like creating a buffer for your position where if it does fail, it won't hurt you as much because at least you built up some comfort and some cushion in it.
Yeah, no, exactly.
So as what is really going to say the market's hot? I mean, we always used to say pre-market runners, but I mean, we know how to look for confirmation in a stock, and if not, if we have some questions about that, maybe we can make it an episode for next week. And we also plan on having Trend Spider on, so he'd actually probably be perfect for that. But with that being said, I mean, what do we need to look for to know, hey, market's hot, aside from just all these 100% runners? Is there, when all the sectors are running together, or is there anything in particular?
Yeah, I think on top of what we talked about, how the individual stock will hold, in addition, I would like to see sympathies run. So we love talking about weed on PGR. So I think that, for instance, if Tilray gets news, SNDL is up 25% the next day. But what else is out there? Sorry, I'm drawing a blank. But
what do you say? Are you looking for weed companies?
Yeah.
Like
I'm
FLGC, Tilray.
Yeah,
that's okay.
Yeah, so like Tilray gets news, SNDL is up like 25%, and again, it's not just popping and dropping, it's because someone tweets about it, it's something about where something pops up and it holds and then it goes higher, something like that, where like the sympathy, you would think that the sympathy has news as well. That's what I would like to see, or let's just take EVs,
people
okay?
looking to buy stuff. Hey, this is running. This looks like a good chance for me to buy.
And KNDI gets news, and then all the other ones, Lucid's up 15 to 20%. All of them, even Ride is up 20%. It's
Fisker,
something where it doesn't even Fisker. It doesn't even matter what the actual company is, just because it's a sympathy. All the algos are hitting them because they look up. They have like a keyword EV. And it makes everything fly. And again, no pop and drop. Pop, come down, hold, go higher. That's what I want to see. That's when it's like, okay, shoot, now I can put 100% on my portfolio on the street and I'm okay with it.
Yeah. Well, kind of moving from hot market onto another thing, and this is usually, from how it seemed, recently, earnings just usually seems like they are not the thing to play. But what if there's no run up to the earnings? It's already down a good bit. When is it a good time to buy, to even look into earnings? And does the market sentiment affect that at all?
Yeah, no, I definitely think that it does depend. It probably depends more on the sector that they're in. So if you see like the entire tech sector, let's just say that the entire tech sector pulls back 25%. Yeah, just like the entire sector just gets hit. And all you're seeing is articles about how Tesla or let's take Snowflake, okay? All you're seeing is that Snowflake sales are up and Snowflake is killing it, and Snowflake 3.0 is the fastest growing platform, and all these headlines. That's one of those times where you can take a freebie, or let's just take Twitter and Instagram, okay, and Facebook, okay. The entire social media sector is down, like I said, 25%. And all you're seeing is Instagram came out with this, and Instagram is doing this, and or even Twitter. Twitter is starting to do paid revenue, and Twitter up their sales of ads by 52%, and Twitter's doing this. That's when, and Twitter announces a dividend, or Twitter's going to announce a dividend. That's one of those times where I would be okay with taking a flyer, but no more than a flyer, because unless you have real edge, I don't see the point to it. So your edge in that scenario would be okay.
Insider trading.
Yeah, exactly. That's your edge, So I think that for normal retail, it's like, okay, the entire sector is down 25%. This one stock is showing relative strength in numbers. Now, if it's trading at 100 revenue, then it doesn't mean anything. So that's one of those times where it's even still, your edge might not even be edge, because it still might need a pullback. It's one of those things where, hey, like Twitter's revenue is supposed to be, up 3x. But if it's trading at 100 times revenue, then it doesn't matter. So it's one of those times where you have to still be intuitive, and you probably have to know the company pretty well. So that's why I say that for most people, I just don't see an edge for it. It's a gamble. And why take a gamble? And the other thing is that you could take some options for fun, but the IV is already juiced. So at that point, what's the point of taking the options?
I've been noticing on a lot of the bigger companies with earnings reports. Like I looked at, Netflix has them today, and the puts were just ridiculously overpriced. So I was like, fuck it, maybe not. I was going to take a little yamin on one of those, but
yeah, I mean, the one time where I would take a potential flyer is, and this is something that I used to look for, is that let's just take the banks, for example, okay? If you take the banks, before the banks have been reporting the last few quarters, there's been massive, I'm talking like $8 to $10 million notional weeklies going through a few days before the banks report. So like Goldman Sachs, there was like a buyer naked call buyer for like 8 or 10 million. He walked away with like 4 million, I think, like within a day or something. So that's one of those times where you could kind of say, okay, somebody knows something. But again, that's not real edge. It's just like, yeah, you know what? Let's see what this guy who's throwing 8 million at this is doing, you know? So you could build a thesis around it, but again, I don't think that it's concrete enough. But for fun, you know, if you treat it like fun, like you're gambling on like the fight with your homies.
Yeah,
that's
how I've been looking for some like mid cap options that, you know, clearly haven't had any run up to earnings and have been beaten down. And instead of gambling on sports like you with no idea about it, I have been, look, man, between you, Manziel, and Zach Morris's dog on Twitter, I mean, I can't tell if FinTwit's turned into like gambling Twitter or finance Twitter. So
yeah, I can't. I do enjoy it. Yeah. So I think that the biggest thing is that listen, it's okay to have a little like. You know, it's okay to take a few flyers here and there, but at least try and have some kind of edge. And don't take some option that's juiced like crazy, because then you'll lose either way. You know, like it won't matter.
Don't, like, one of my rules on options, unless I'm just day trading around it, if I'm taking flyers, they're going to be like less than 20 cents, you know? Like, I'm buying super cheap ones, or where it's like, hey, we're going out the money, Manziel style, and these earnings better fucking bang.
Yeah.
And if not, fuck exactly. It, I just lost $250 and I'll live to see another day.
Oh, that's so exactly. $250, fine. You know, like, that's not going to shoot you. But hey, if something happens where like they're getting bought out for, you know, 4x the price or whatever, and they announce it on earnings, oh my God, like $200 will turn to like 200 grand or something, or something insane.
That shit, maybe $5,000, but I'll take that.
Yeah. 200 grand was maybe a little ambitious, but
no, I mean, that was, I think, going, like, even just saying like such a big number off a small investment, like, it just goes back to like one of the bigger mistakes small traders make, where they just see the price target. They imagine their amount of shares at that price target. Oh my God, yeah. And then, I mean, I did it with GHSI. You see people do it with like UAVS when that had its thing. You saw people do it with LTNC. When people saw like $1 on that, people immediately just think, wow, if it's 4 cents right now and I bought 250,000 for whatever small amount of cash that is, like, here's my house, you know? And now, you know, it's a cent or whatever, and they're down. But yeah, shit like that. It's all the mental mistakes.
Yeah, no, exactly.
Well, we probably would have made this a few minutes longer, but like I said, we did record this once, and oopsies, we made mistake. But we're fine-tuned this time, so hope you guys enjoyed it. And on Sunday, we have Liquidity Capital. I'm sure most of you guys know them, especially if you're into investment banking at all. So yeah, make sure to check it out, and we'll see you all then. The market's getting hot, so you don't want to shave your stocks off too fast, but let me tell you what you never want to have to worry about shaving, and that's your manhood. And with Manscaped, you get a 20% off discount and free shipping when you use code PGIR, and let me tell you about all the fun stuff it comes with. It includes the lawnmower, and let me tell you, with the wireless charging system, and now it's waterproof, so shave it off in the shower for all I care, is the safest way to get it clean downstairs. But that's not all. It also comes with the weed whacker for the nose, the ears, and you know, whatever things, small crevices you might have in your body. But, you know, right when you thought that was all, you also get the most comfy boxers in the world, Manscaped brand. You get a travel shower bag for all your good Manscaped goods, and the triple kill. The Crop Cleanser, romance your stones. The Crop Reviver, keep the boys cool. And Crop Preserver, stave off ball chafe. This is what you need, fellas, so make sure to go to manscaped.com and use code PGIR for a discount and free shipping. Manscaped.com.